Cloudcast Media.
Drew Schlosberg Spotlight on the Community Show, amplifying the voices of social impact organizations, entrepreneurs, local nonprofits, and other community champions who shape the culture, creativity, and connectivity of San Diego. Brought to you by Mission Fed Credit Union, bringing good things to San Diego for over 60 years. Learn more about what is good for you and good for all by visiting www.missionfed.com.
I'm Drew Schlosberg of Cloudcast Media, and we are so pleased to have in the studio today Richard Tassiello. He is the founder and CEO of Retirement Strategies Group, and full disclosure, a partner of mine and Charles Parisi's on Cloudcast Media. How you doing, Richard?
I'm doing great, Drew. Thank you.
Very good. Joined by my phenomenal co-host.
I love these adjectives.
Yeah, exactly.
They keep getting better.
I keep on saying this, so then I said I can't make the show next week.
I offered. I'm here. I'm around.
You're right. Okay, very good.
What I got to do?
Yeah, you heard this, Richard. You got some investment in this.
I'm a witness.
That's right. You're a witness. Kristen Fogel is Executive Director of San Diego Writers Inc. on this. Okay, so Kristen has a question for you regarding your mission.
Yeah, so, you've done this show a number of times, I've heard, but tell me what Retirement Strategies Group does.
Sure. No, great question. And first and foremost, I appreciate you having me back on. It's
always good content. It's always good content.
Yeah, and I really appreciate the opportunity to tell our story and visit with you folks. At Retirement Strategies Group, we are a financial planning firm, as the name kind of lends to. But I think we do things a little bit different than the traditional financial advisory firms out there. And we are all about education. So that's our key focus in how we engage with our clients. We serve both corporations with their 401k plans and their employer benefits, as well as individuals with individual wealth management.
Okay.
With a heavy focus, again, on education, coaching. So as I shared, a lot different than what our competitors do, where they'll visit with someone and produce a financial plan, and in most cases, deliver a plan that the end client doesn't even really understand. A lot of pies, graphs, et cetera. We do things the exact opposite, where we come back with some bullet points and share with them and educate them to help them get to where they want to be in retirement.
Great. Yeah, that's so important. I mean, these are, I'd said on the show once before, my husband was in benefits administration for a time, and it's a really loaded issue. I mean, these are people's livelihoods. So people need to be educated. They need to be talked through all these things. It can be really complicated. So It's nice that you have an organization that really puts the client first in that sort of way.
Well, and you're spot on that. Education, whether it's with learning about investments or whether it's about health or it doesn't make a difference. It's the key on this. And we're in this frenetic world that everyone wants this information in 5 seconds.
Right.
And then all of a sudden they really don't understand what they're getting into. And of course, your stuff is pretty serious. This is a lifelong thing about investments, and some hasty decisions are going to be certainly not coming back as good results 50 years from now and so forth. What are the 6 L's? I'm fascinated by this.
No, great question. And it kind of lends back to our approach on education.
Yeah.
And when I was starting the company 20 years ago, I stepped back and said, hey, what is the best way that if I'm sitting in front of someone or someone on my team is sitting in front of one of our clients, how can we educate them where they can really understand what we're talking about? And we created what we call the 6 L's of retirement. And the 6 L's of retirement really, in our opinion, touches on every aspect of somebody's financial picture. So the 6 L's, Drew, specifically is L number 1 is lack of capital. And you either have enough money at retirement or you don't. And hopefully, if we start working with you when you're still earning a paycheck and working, we're going to help you drive behaviors to save enough money for retirement. The next L is losses on investments, and specifically on inopportune times. So, all of us remember probably the biggest crash in our lifetime was 2008, 2009, the financial crisis. And if you were 60, 65 years old at that time, you lost half of your nest egg.
Oof.
And we saw it with so many people where they had to go back to work at 70 years old, and there wasn't a lot of opportunity with them. Many, the joke is being a Walmart greeter or working in a library. They had to go back because they literally lost half their nest egg. So that's a really important L. So what we do is we drive behaviors as you're nearing retirement. You want to make sure that you are more conservatively invested.
Sure.
Another L is litigation risk. So we take an approach where when we're developing a financial plan for somebody, is let's look at potential things that can really eat away at your nest egg. Mm-hmm. And so we dive into, what do you do for a living? What are your hobbies? What are your things? So we really understand any litigation risks that you may have that could wipe away your nest egg. We spend a lot of time on health-related issues. So another L is long-term care. We know one of the biggest obstacles that could wipe away your nest egg is a long-term care event. So we make sure you have proper planning and so forth for long-term care coverage. And the biggest risk to all of us is longevity. It's a great risk. We want to live to age 100, but we need to prepare and plan to live to age 100 and make sure we have the resources to get us to age 100. So in one respect, it's a great thing. And the other side is we want to make sure we have the capital to live a long life and to continue to maintain our lifestyle security.
And what's so interesting about that, Richard, that last one, ties into the previous L's without question. One of our frequent guests, and Kristen and I know this, is we have the Alzheimer's Association of San Diego on, and as Alzheimer's is growing, partly because we're living longer, and it's inevitable until they find some cure for this. And then I know you probably hear this all the time. Am I going to outlive my money? And that's why they work with folks like with you on it. That's interesting. I never heard the litigation thing. That makes all the sense.
Yeah, me either.
In the world.
That's brilliant.
Yeah, it really is in that aspect of it. And these are things that out of nowhere, if you know anything about litigation in this country, at least the way it's set up, you can just be walking around doing nothing. Someone doesn't like you, and
we are a very litigious nation. Yes,
no question.
But you don't have a choice. I can sit there, or you could sit there and just say to you, or you accuse me of X, and now the next thing you know, I'm in a deposition, and now I got to hire someone at $10,000. I didn't do anything. For God's sake, and that's $10,000 coming right out of the top of your nest egg in this, and the long-term health care. My mom had long-term health care. She was smart enough to get that, and it really benefited her later in life in that aspect of it. We're chatting with Richard Tassiello. He is the founder and CEO of Retirement Strategies Group. I'm Drew Schlosberg. You're listening to another edition of Drew Schlosberg Spotlight on the Community Show, the nation's longest-running community podcast. We're now in our 17th year. Brought to you by Mission Fed Credit Union. We're in these wonderful Mission Fed studios in Scripps Ranch, and Mission Fed been doing cool things in San Diego for more than 60 years, joined by my co-host, Kristen Fogel, the executive director of San Diego Writers Inc. Kristen?
There was no adjective before my name, which hurt me a little bit, but that's okay.
See, it's in her contract that I've got to call her the cool, the phenomenal, the effervescent.
I'm going to survive. It's okay.
So now I've got a new one for her, the recalcitrant.
Wow. Okay. I like it. Yeah, I like it a lot. I'm maybe going off script a little here, but you were mentioning 2008, and as an older millennial who is entering the workforce, are we just doomed? I mean, should we just, should we just drink our lattes and shut up and is...
No, well, listen, that's a great question. And then you fast forward to COVID.
Right.
And the same thing, I've got young daughters at home, as Drew knows, and one graduated 2 years ago from UC Davis, and one's a senior right now at UCLA. And now things have really opened back up. But 2 years ago, my middle daughter, there was literally no jobs in the middle of COVID because everybody got sent home. Companies were learning how to work remotely and virtually, and her and all of her girlfriends I saw really, really struggled in getting work. Now, thankfully, fast forward 2 years later, things seem to be a little bit more normalized, or the new normal, I would say. But no, you're not screwed. The millennials are not screwed. There's a lot. I think we just need to pivot sometimes in what our career, what we're looking to do, and get into fields that are thriving like tech and so forth. So just kind of pivot in what you're doing.
Okay. Well, thank you for not dooming me. I had another question actually about what you term behavioral financial literacy versus I guess, straight financial literacy?
No, great question. So I always tell a story that I can go into one of our corporate 401k plans and sit down with 10 of their employees, and I can teach them about a 401k plan, putting money away. If you put away X amount of money for 10 years, it'll be worth Y. And I can give them a multiple choice question, and they'll understand, they'll get it right. They'll know, hey, if you put away money for this amount of time, it's going to be worth this much money. So we can teach financial literacy. What we really can't teach and we really have to coach is the behavioral side of financial literacy and getting someone to act upon and do things. And it really, what we really kind of, when we go in, we're coaching and trying to get the right financial behaviors, which is a little bit different than knowing financial stuff, but creating that behavior to actually do the right things. So that's kind of what we mean when we say, behavioral financial literacy versus financial literacy.
That's so fascinating. Just the process by which you try to motivate an individual to enact the actual plan. So,
correct.
Yeah.
Now, are you saving money for your 5-year-old starting now?
Am I?
Yeah.
Well, actually, yeah. So my uncle is a big proponent of Dave Ramsey, who I have some, mixed feelings about. But so he has his little save, give, whatever the third one is, his little bank, and so he is into that for sure.
But listen, when you do the math, and this,
spend. Save, give, spend.
Right. You spend, you save X amount at age 5, whatever it is, $25 a month. I'm making this up and so on. You add that up to age 65. That's some, one, not breaking the bank, no pun intended.
Yeah.
It's 25, whatever the number is, do you do that with your daughters?
I absolutely, Drew. And it is sometimes fascinating if you see, I show examples if someone starts saving just from age 20 to age 30 and they stop. Then someone starting at age 40 to age 65, putting away the same amount of money, the person that stopped at age 30 has more money at age 65 than the person that started at age 40.
Because of the
compounding of interest.
Yeah.
And so we show those types of examples to our younger investors, employees that we go out to, because it is when they see those numbers, that's what drives the positive behavior to get them to do what they should be doing.
And it's math, it's data. It's something that we were just talking to Aaron about, the previous folks. Richard, when we come back from a break, I want to talk more about that, coaching versus financial advice. Kristen wants to ask you somewhat on your outreach in the community and maybe some of the challenges moving forward. And again, we always save some questions, what our listeners can do to support your efforts as we're chatting with Richard Tassiello, founder and CEO of Retirement Strategies Group. I'm Drew Schlosberg. We're listening to yet another edition of Drew Schlosberg Spotlight on the Community Show, the nation's longest running community podcast, on our 17th year, brought to you by Mission Fed Credit Union. We will be right back.
When you do your banking with Mission Fed, you get great rates on auto and home loans. That's good for you, but something good also happens for a lot of other people. We're not for profit, so we put money back into the community to help lots of great nonprofits to keep San Diego strong. So you're not just getting something good, you're doing something good. Come to Mission Fed. It's banking that's good for all.
Brand amplification is the DNA of Cloudcast Media, and our code is the powerful blending of sound, voice, and storytelling to lift local brands and their communities. Whether it is our Brandcast, Schoolcast, or Causecast platforms, the unifying ethos is all about this community, the one you call home. If you dare to dream and want to explore the brand amplification of Cloudcast, a national leader in local podcasting and other Winfluence strategies, please visit us at cloudcast.us.
I'm Drew Schlosberg, and you're listening to another edition of Drew Schlosberg Spotlight on the Community Show, the nation's longest-running community podcast. Now in our 17th year, we have in the studio Richard Tassiello, founder and CEO of Retirement Strategies Group, joined by my co-host Kristen Fogel, the executive director of San Diego Writers Inc., celebrating their 20th anniversary next year. Go look at their website. They got a whole bunch of cool things happening soon, correct?
Correct. And just like Richard's company, Retirement Strategies Group, 20 years next year as well, right? Excellent.
January.
So maybe you guys have to have a dual celebration.
We'll write about finance. It'll be a great time.
There
It'll
you
be
go.
So much fun.
I think it's perfect. Talk about coaching versus financial advice.
No, this is so good. Great question, Drew. And I'm sorry if we're not all sports fans here, but I always do a lot of analogies about sports.
Yeah, all we care about that Drew likes it, right?
Drew likes it. So I'm going to pivot to UCLA and the John Wooden days.
There comes Drew.
There we go.
John
Exactly.
Wooden days. And everybody that comes out of UCLA in the early 70s and some fellow New Yorkers and Kareem Abdul-Jabbar and then I'll throw a San Diego person at you, Mr. Walton as well.
Sure.
They all claimed one thing. What they got from Mr. Wooden, Coach Wooden, was coaching. It wasn't just, hey, do this. It was literally setting them up for the rest of their lives.
That's right.
And that's what good coaches do. And so we try to be ambassadors of that in coaching our clients, because we just don't want to give them advice and tell them to go and move on and go do that. Here's your asset allocation plan. Move on. We want to coach them throughout their years and get them to where they want to be and instill in them good habits, good financial habits. So that's what we really thrive ourselves on, is being good coaches, not just providing advice.
So do you have the pyramid of success, printed and in your house, at your work? Have your daughters memorized it? Because they're Bruins, aren't they?
Yeah, two of the three.
Right.
Oh.
Exactly. The pyramid of success was this chart that John Wooden came up with, because he was a teacher also. Everybody who knows anything about John Wooden, including players, talks about his little sayings, that, certainly every one of these players, from Kareem Abdul-Jabbar to Bill Walton to everybody in between, certainly quotes in that. And that's very good. What's quite obvious about you, Richard, and I know this, we can appreciate this, Kristen and I, is that you are there shoulder to shoulder with your client. It's not like, good, we got your money, we'll see you in a year when we do our annual chat. In this aspect of it, it seems to me the good financial groups do that, right? It's common sense, is it not?
No question about it. It is so important. The number one challenge or issue that I think we face in our industry is one of trust. Unfortunately, a lot of folks think of us sometimes, our profession, I should say, is like a car mechanic. When you find a good car mechanic that you trust,
100%.
Yeah, absolutely.
You will tell every single one of your friends about that individual.
And you will be with that person
forever
until your car, the wheels start falling off.
Exactly. And I've been fortunate enough to find that person in my life. He's a mobile mechanic, and I trust him with my daughters. He's that good.
Wow.
So we knew that early on, that you need to be transparent, trustworthy, and to your point, Drew, it is being there shoulder to shoulder with your clients, because they go through a lot of life changes while you're working with them, getting married, having children, having grandkids, unfortunately passing away. You want to be with the beneficiaries when their last few days of their close family members passing away. So it is so important. It's just so much more than just providing financial advice. It's providing all of the family events that happen throughout their lives.
Yeah, with that question, Kristen?
Yeah. So obviously when we're talking about finance, we start thinking about the market. So where are we at with the market? Or are there challenges there right now? Can you speak to that a little?
Yeah, let me speak to that. We hate making predictions on the market,
Sure.
but we study historic markets all the time, and it's important in our role. And when I look back just over the last 40 years, for example, so if we go back to the early 1980s, the Dow Jones back in the early 1980s was at 800. Fast forward to today, it's at 35,000. We've been in like a 40-year bull market run with a few hiccups, right? We had 9/11, 08, 09, COVID. COVID was a short hiccup, thankfully.
It was.
But 08, 09, 10 was a 2.5-year hiccup, I'll call it.
Right.
And after the terrorist attacks on our own soil. It was a good year and a half where there were no jobs. There was nothing happening in the economy. But if you just look at the 40-year period, it's been a straight bull market with a little bit of volatility. My concern today is, what is the next 40 years going to look like? And I think a lot of the younger millennials, they think, hey, we just put money in and it's going to grow 10, 15, 20% a year. And I was telling them, we can't bank on that. That's great if that happens, but we need to plan on the fact that that's not going to happen, and we still want to get you to where you need to be. And that's one of the challenges in our industry, because they say, well, Richard, if your group's only saying we're going to get 6, 7%, we're going to go with the guy down the block that's saying, hey, we're going to get 20%. And it's just promises that they can't deliver, and we need to educate our clients.
So are we looking at more conservative investments? Are we looking at like diversifying more for that group?
Both.
Okay.
So great question. And I think if you also look, the last couple of years, we've been in a rising interest rate environment. Still all-time lows, but most people don't understand that. But back 20 years ago,
18%.
18% for a CD, and a mortgage cost you 12%. And today, everybody's, I can't buy a house because rates are at 7.5.
They don't know.
They don't understand. So I have to show data to show them that, well, your parents, when they bought their house 20, 25 years ago, their mortgage they were happy if they got a 12, 13% mortgage. So we need to provide that education. But what's happening is it's kind of pulling back and making the economy not run as well as it has been. So I think we're going to kind of level off on that a little bit. But diversification, you mentioned the key word. That is the most important thing, and it's really based on where you're at in your life, your age, where you're looking to go, and we help develop those diversification plans.
You know what's interesting about that, Kristen, and I don't know if I find this with my daughter, 29 years old, teaches Chaparral Elementary School in Poway District, a great kid. But listen, sometimes, people lose track of what needs and wants are. And our parents really understood what needs and wants are. And there's nothing wrong that I want X, and if you can afford to have it, that's great, right? But better take care of the needs first. And I remember when plasma TVs came out, and there were $3,000 at a shot, and I'm going, you're spending $3,000 for a TV? Are you out of your mind? And of course, now they've come down to like that same plasma TV is probably $450 at Costco, really, in this aspect of it. But talk about how important it is when you work with clients on this, without trying to lecture them, is that, there's a big difference between what you need and what you want. Do you talk about that?
All the time, Drew. And in fact, we have a little saying to our clients when they're out at a store. If you're looking at buying something, we say if your personal bank account, your cash that's available can't afford this thing twice over, don't buy it. Because we go out, we have credit cards. It's so easy to swipe a credit card these days. So we try to, again, going back to the behavioral aspect of what we educate and teach, we bring it back to what is your current checking account balance? And if you can't afford this purchase 2 times over, you need to walk away. It's not a need, it's a want, and you need to be able to walk away from that.
That's a great rule. We also have a rule in my house, which is a month later, do you still want it? And also, does someone else have it that we can borrow it from? So
that's a great rule. I like that rule. I'm going to use that.
You told me the rule is if Kristen wants it, she gets it.
I mean, the rules are flexible. So those rules are for my husband. I have, mine might be a little bit different. So, yeah.
Very good. Richard, what can our listeners do to help support your efforts?
You know what, Drew? I think it's really just getting out the word of what we do as an organization, our educational process. We're in a really good spot. Everybody on my team, we're all aligned in the same thing. We're like-minded people. We like to give back to the community, San Diego, and we've got a really good culture developed, and we're in a good place.
What's the website? How do they get a hold of you?
The website is retirementstrategiesgroup.com.
That's great. And so, listen, I'll say this also personally. I enjoy working with Richard on many different fronts on this aspect of it. Honest as the day is long. You're an excellent communicator, which is terrific. Obviously, that's the most important thing. I'm a little passionate about communication as well on this. So, congratulations on the great success of RSG and moving forward. And I got just 2 more words. Go Bruins.
Thank you, Richard.
Richard, have a wonderful weekend. Thanks so much for joining us.
I appreciate you having me. Thank you.
You bet. Richard Tassiello, the founder and CEO of Retirement Strategies Group, joined by my co-host, Kristen Fogel, Executive Director of San Diego Writers, Inc. I'm Drew Schlosberg, and you've been listening to another edition of Drew Schlosberg Spotlight on the Community Show, the nation's longest-running community podcast. We are now in our 17th year. We hope you enjoyed the show.
You've been listening to an episode of Drew Schlosberg's Spotlight on the Community Show, amplifying the voices of social impact organizations, entrepreneurs, local nonprofits, and other community champions who shape the culture, creativity, and connectivity of San Diego community. Brought to you by Mission Fed Credit Union, bringing good things to San Diego for over 60 years. Learn more about what is good for you and good for all by visiting www.missionfed.com.
Cloudcast Media.